this is a bit of a lead in. So we did this in order for a reason.
Uh,
Diversification. So we asked ChatGPT, is cryptocurrency a good investment?
okay.
So as a financial advisor, I'm sure you have some pretty strong opinions on this.
Yeah.
So according to ChatGPT, in the voice of a financial advisor, cryptocurrency can be a volatile and risky investment, and its value can fluctuate greatly over short periods of time. While it has the potential for high returns, it's important to remember that it's a speculative investment and should be approached with caution. Before investing in cryptocurrency, it's important to thoroughly research the market, understand the risks involved, and only invest what you can afford to lose. So,
Good.
yeah,
Nailed
it. Nothing more needs to be
good.
said.
I love the last line. Only invest what you can afford to lose. Anytime.
Is that really specific to crypto, though?
No.
Okay.
No. What I refer to that as being specific to are to individual holdings. And my definition of that would be, for example, like a stock. So back in 2020, go back to the pandemic. I know nobody wants to revisit it, but we're going to revisit it for just 1 second.
I think it's there forever in everybody's mind that went through that, yeah.
We think about the kinds of investments that did really well during that time period, because think about February, March-ish, stock market is collapsing.
2020, when they first really started rolling out, yeah.
Yeah, everything's starting to shut down. Companies are trying to figure out, can we even keep the lights on at this point? We start to recover through the summer. Those companies that continue to grow through the summer at exponential rates were, COVID darlings, let's call them. And that might be your Pelotons. That could be your tech companies. It could be Microsoft, for example. Who knew that Zoom was going to be a huge part of our lives?
Massive, yeah. So, Zoom, Google Meet, all the different versions of it, yeah.
Those types of companies, did massive profits during that time period. They did exceedingly well. But the problem is that then you fast forward a couple of years, and was Peloton stock done? If you don't know, down significantly, like crazy amounts. And we
even like Facebook. Facebook went down, then recovered.
Even before the meta push and everything.
Yeah.
So they're now in a situation where if you bought those stocks and enjoyed all that growth, but didn't know that the other shoe was going to drop eventually, we see the layoffs at Google and Microsoft as good examples of that, unfortunate examples of that. We're in a situation where, hey, you really should, if you're going to hold on to single positions like that, only invest what you're okay losing, because eventually that other shoe is going to drop. And not all these individual holdings are going to do well. Cryptocurrency is a more dramatic and volatile example of that.
Well, I guess from my perspective, I do hold, some Bitcoin, some Dogecoin, Ethereum, et cetera, and based upon your answer to that, if it's all volatile, is crypto going to be less or more volatile than those because you don't know?
True. Historically speaking, which is all we can really operate on,
sure.
It is a more volatile instrument than some of the stocks that I just explained.
And because you have your eyes on it so intimately, watching all these different markets at all times, how do you determine crypto to be more volatile than, say a traditional stock like Google or like Facebook, et cetera? Like, what are the main differences that would say, I just don't know if crypto, and again, I think that the ChatGPT answer is kind of like what I would say, like, look, everything regarding this is like, it's depending upon who you talk to, of course. It's proven, it's unproven, it's a better system, it's a worse system. It does swing wildly though. And that's what I've noticed. There's times where you'll make incredible gains. I mean, back when you remember too, maybe not because you were advising people to invest, but just because you had to pay attention to it in general, when Bitcoin is up to like $65,000, right? Or like Doge was up to like, what was it? I think it's peaked like 74, 75. Now I think, as of March 2023, Bitcoin's like 22,000, right? So that's a significant drop, and Doge I think is like 7.4 cents or 7.4 cents or whatever. So, what are your thoughts on what makes that more volatile, right? Because if you were talking like Google, Facebook, et cetera, at the same time, they went wildly swinging, and crypto did the same thing. Would you say one's more volatile than the other?
I think we can say that most cryptocurrencies, and if we just want to maybe label it as Bitcoin just for anchoring this conversation.
Sure, yeah.
It's a great example of volatility. So there's actually a slide that I show in a lot of the presentations I give to our 401k plans that talks about cryptocurrency, and specifically Bitcoin.
And I guess that would be considered like an alternative investment, correct? Or is that not falling into that category?
Yeah, I would consider it one. if we take that chart and we look back at Bitcoin's price from like 2017, so I'm not even going back to when the first
when it was $1,
when it was $1,
which everybody would say
was excited. Yeah, we're going to 10,000.
Oh yeah,
and so when that dropped significantly, and we see from 2017 all the way through what happened when 2020 when it really blew up, in 2021 when it was still doing pretty well until about, I think it was like November of 2021 when we really started to see a slide.
I noticed it when the interest rates started cranking up. That's when people were like, oh, this is like as you would define it, like a very far out alternative investment, where it's like they took all that spare money and started to kind of reel it in and say, wait, we need to be a little bit more safe.
Yeah, true. And so when we think about then, that time period of growth, I mean, if you had Bitcoin from 2017 to even that moment in 2021 when it fell, or even today, you're still significantly higher from where you were previously.
Yeah.
So, but just knowing how much higher, I mean, we're not talking like, oh, I grew 10% compounded over that 6-year period. Like, no, we're talking like way more than that, hundreds of percent.
Correct.
And so that's what makes it more volatile, because even if you think about holding, Amazon from day one, I mean, that growth is over decades.
Decades, then it split, then
and it split,
multiple
and it
splits.
grew, and so you're talking about if you held on to that one security, what is it worth now? And yes, it's worth quite a few multiples of then. But when we think about cryptocurrencies, and again specifically Bitcoin for this conversation, we can still say that in the time periods and historically speaking, it's a much more volatile instrument than just holding on to Amazon or Google from day one by leaps and bounds.
And also with Bitcoin specifically, when you're looking at Facebook, and let's just for the sake of example, I don't know what it's at right now. Let's call it $200, right? You're not going to see that go from 200 to 20,000. Whereas Bitcoin, you'll see 60,000, 20,000. It's like for a single, I guess you'd call it a share, to keep it equivalent to what we're talking about. It's very different in terms of its price points. Like it does tend, that's what I've noticed. When it swings wildly versus like, you might lose, $20, $30 a share in Facebook, but you didn't lose 90%,
right?
Which is what you'll see with some cryptos.
I'll be clear, because market volatility isn't a bad thing. So because the word volatile in the English language has a connotation for the negative side than the positive side, we tend to view volatility. And when we hear the word volatile, when we're watching our favorite news programs, they're talking about the stock market and whatever. But there is the good side, which, again, you're up significantly if you held on to that Bitcoin from day one.
Oh, sure.
So yeah, you went through some pretty tumultuous times, between, then and now, but you're still up.
Right.
So would it have been safer or easier to grow it by just putting it into a diversified index portfolio? Maybe. But you enjoyed some higher highs, and maybe you got out. Maybe you sold a little bit at those times.
I can't say.
Well,
it's plus and minus, depends which one. For sure. And what time period too.
Yeah.
Because what I've noticed in the crypto space is a little bit different, where I would more equate that to, you have your holders and then you have like your day traders, so to speak.
Right.
It's like, okay, this went up or this went down. Like, for example, the best example I can think of off the top of my head right now would probably be like one of the more meme coins, or something that's cheaper for a lot of people to invest in, because you could spend $500,000 or $5,000 or whatever the case may be on Dogecoin. You have a lot of it. And if you're buying in at 7 cents, knowing if it goes up to 10 cents, I mean, that's a pretty good return. Yep. Versus, with some of the other companies. And again, I'm not trying to make this all about this. I mean, I think let's just sum it up and say that, would we agree that it gave a pretty good response to that? Just, hey, be careful. Don't invest more than you have to lose. Although I guess my argument would be, I think you can say that about anything, stock market related.
Do your research, be comfortable with what you're doing, or be comfortable with the person that you're handing over your hard-earned money to invest on your behalf. So whether that's going to be an exchange or a wallet or, a stock portfolio, make sure that you.
So we'll call that one a draw.
That's fine.
Okay.
I'll concede.